Hello, Assalamu alaikum. Welcome to my channel. So today we are going to have our second session on finance for non-finance. So in the last lecture we discussed about the concept of double entry and how the double entry concept applies to the transactions, the financial data. So here we will just begin with the question. So here you can see that there are few transactions which the business has incurred. So the first transaction is the purchase of 800 worth of inventory on credit. So you need to pass a double entry for it. So first of all, you need to realize that what is increasing in this case, in this entry. So the inventory is increasing, of course, as you are buying inventory. So inventory is an asset, and an increase in an asset is known as a debit. So the inventory would be debit, and there is something decreasing also, which is on the credit side, but here there's no cash outflow. So what is happening is that the liability is increasing because you have purchased these goods on credit. So an increase in liability would be considered as a credit. So the first entry would be inventory debit and accounts payable credit. So I would like you to pause, hit the pause button, and try this question for yourself and see that how do you pass the entries, accounting entries. Then we would move to the solution. So this is the solution. I've tried to simplify it. As I said, that increase in liabilities is, so you have to put credit and debit in front of it. So I believe this would be helpful. This is just the beginning, that so that you are developing the concept of debit and credit. Now we are moving towards the section, the topic chart of accounts. So chart of accounts is basically, as you can see, that it is a collection of all the accounts, general ledgers. You can see that there is an account code, the account description, account type, and what statement it would be reflecting. So for example, cash is an asset account and it would reflect in the balance sheet, and wages is an expense account, it would reflect in the income statement. So whenever you're starting a business and you are uh, just developing your chart of accounts, first thing you need to do in your accounting software is to develop a chart of account which is aligned to your type of business. So this was the basic concept. This is a small question which I would like you to attempt it. I mean, it's quite simple, as you have learned that asset is equal to capital plus liabilities. So one of the options is correct. So you need to identify which one is that. So I would like you to just hit the pause button and reflect a bit. Then I would tell you the answer. So the answer is basically option C. Capital is equal to assets minus liabilities. Why? Because if you just move the liabilities towards that side, it would become asset is equal to capital plus liability. So this is basically the accounting equation which is presented in a different manner. So option C is the correct answer. So now we would be talking about a stepwise approach for the preparation of financial statements. First of all, you need to pass the double entries. Then there you have to do the T accounts, then there is a trial balance, then comes the P&L, and then comes the balance sheet. So we have a small question here. Basically, you have a list of balances mentioned: bank loan, cash at bank, capital, purchases, sales, payables. All these are balances, but these are not presented as debit and credit. So first of all, you need to present these balances as debit or credit. I would just give you a hint that cash is an asset account, so it would be brought in the debit side. Capital is a credit nature account, so it would go in the credit side. So in this manner you need to draw up a trial balance. And how would you know that it is correct? The totals would be matching, the debit and credit would be matching. Then you need to pass these double entries, these A, B, C, and then you need to incorporate the changes of those double entries in the trial balance. So it would become an adjusted trial balance. So please take your time and attempt this question, and then we would be looking at the solution. So here's the solution. As you can see that the trial balance is here. You can see that the the balances have been inserted, the figures are plugged in the relevant debit and credit columns, and the totals can be seen that they are matching. Now comes the second part, is that you have passed the double entries. So the first entry was that the purchases half were on credit, half were on cash. So purchase debit, cash credit, accounts payable credit. As you can see that the debit and credits are matching. Then there is a second entry, cash debit, receivable debit, and sales credit. So here you have made a sales of 1040, and you have made received 240 cash and 800 as a credit sales. So it is reflected in the receivable account. And the last entry was quite straightforward. There were just some expenses, which means that expenses are debit and cash was credit. So now you are able to draw adjusted trial balance, which means that you would simply need to incorporate the changes. So when you have the credit entry and debit entry of cash need to be added and subtracted. So here you have the figure of cash, which is adjusted. Many heads are just same as they were previously. You only need to incorporate adjustments, the changes. So for payables, you can see that the 500 has been added from where? As you can see that here we have a payable which is an increase. So here it is being added, this 500. So in this manner you have drawn up a trial balance, adjusted trial balance, and you can see that they are balancing. The debit is balancing with the credit. So I hope you like this video, and I would like you to attempt this question on your own thoroughly and understand the concept behind the double entries, and especially by considering the slides which I shown you earlier, which means that you need to save this slide, especially this one. uh, as you can see that the increase and decrease debit and credit with the relevant elements of financial statements. So I hope you like the video, and do not forget to subscribe for further information and knowledge. Thank you.